If your employer provides a dependent care flexible spending account, often referred to as a DCA, you have the opportunity to save money on your dependent care expenses. A DCA through a cafeteria plan is a governmentally allowed plan where you do not pay federal income taxes, FICA taxes, also known as Social Security and Medicare, and in some states, state income taxes on qualified dependent care expenses. Therefore, a person can generally save around 20 to 40% of their dependent care expenses, up to certain limits, because you are allowed to exclude these amounts from your income when reporting your taxes. Unlike a medical flexible spending account, which is pre-funded, a DCA is payroll based. This means that you can be reimbursed for expenses up to the amount that has been taken out of your paycheck to date. Also, the dependent care expenses have to have been paid for and incurred in order to be reimbursed by your DCA. To understand the DCA a little better, allow us to walk through an example. Let's say you have a local daycare that watches your 2-year-old child while you and your spouse are at work. Let's also assume that the daycare costs $300 a month, or $3,600 a year. If you elect an annual DCA amount of $3,600 and get paid semi-monthly, $150 will be taken out of each paycheck, and you will not pay taxes on this $150. After each month that the child goes to daycare, Beneflex-Erie will be able to reimburse you $300. In this example, you paid for your child's daycare using pre-tax money. If you are in the 22% tax bracket living in Pennsylvania, that means you saved $1,177.92 over the course of the year just by participating in the DCA. To participate in a DCA, you simply have to do the following. Familiarize yourself with the specific details of your employer's plan by reading through the plan documents and information packet provided to you by us here at Beneflex-Erie. Decide how much to contribute to the DCA, enroll into the DCA, and start spending the money on qualified dependent care expenses. It's important to remember that the DCA has a use it or lose it rule, which means that any funds you do not use at the end of the plan year are returned to the employer. However, employers have the option to implement a grace period, which gives you an extra 75 days to spend the money in your account. As always, visit us at beneflex-erie.com or call us at 1-800-454-3107 if you have any questions.